Learning how to build wealth from nothing may sound like mission impossible, especially if you have always believed that wealthy people either inherit their wealth or have benefited from powerful connections. However, learning how to build wealth from nothing is not as difficult as it may sound. Today we are going to talk about Think Like a Bank to generate more wealth. Before starting, make sure to like and subscribe to our YouTube channel for more future videos. Number 10. Use a robo-advisor. Investors must choose how to build a portfolio of stock, bond, and REI ETFs when they begin investing. When and how many should they purchase? What ETFs should they pick first, exactly? For novice investors, this might all be very complicated. However, with the emergence of robo-advisors, investors may now simply automate their investments in an ETF portfolio that is already diversified and tailored to their risk appetite. A robo-advisor like 𝐏𝐲 builds a diversified portfolio including stock, bond, and REI ETFs using the modern portfolio theory. Each investor receives a portfolio that is tailored to their level of risk tolerance. You can use 𝐏𝐲's platform to automatically deposit more money, reinvest dividends, and periodically rebalance your portfolio thanks to recent advancements in financial technology. Number 9. Embrace passive investing. You must first save, then invest, in order to accumulate riches. You'll have to do the task if you can't get paid to do it. Your earning potential is constrained, and you can't make money while you're sleeping. But putting your money to work for you by investing it in the market means that you are making money off of the labor of others. Savings accounts are not investments, placing money in one is. Your emergency fund should be the sole money you leave there. In addition, your money should be in productive investments that have little risk and high returns. Market timing is not a wise tactic. Instead than being obsessed with short-term market fluctuations, it is best to cultivate a long-term perspective on investment. Market timing is not the most effective strategy for building long-term wealth. Actively investing should be avoided when the majority of your funds are at stake. The argument between active and passive investing is not new. Number 8. Explore passive income ideas. In addition to raising the revenue from your profession or business, you should look into several passive income sources. Contrary to your employment or business, passive income is revenue you create that does not depend on your ongoing presence or labor. For those of us studying how to create riches out of nothing, passive income is essential. Create digital items on topics that attract people if you are an authority in a particular niche, such as books, video courses, email courses, or paid webinars. You can make money from a single product for a very long time. You can market your concept through a series of standard make them once blog posts, rather than as a digital product. Once your blog has a significant amount of traffic, you may monetize it using a variety of methods, including Google AdSense, digital goods, paid membership, sponsorships, and guest posts. Affiliate marketing, you can sell other merchants' products and get money on each sale in place of selling your own digital goods on your blog. There is no need to build your own product thanks to affiliate marketing. With dropshipping, you can sell other people's products without having to buy them yourself. You accept orders from customers, process those orders with producers, and then the producer delivers the goods to the customer. Number 7. Improve your skill set. There are two methods to improve your investments and savings: cut back on spending or increase income. Although the latter needs equal attention to the former, many financial counselors concentrate on the former. If you are employed, broaden your skill set by enrolling in professional training programs and actively pursuing ongoing professional development. You can receive promotions or better employment offers from other organizations by developing your talents, which translates into a larger income. If you run a small firm, increase your market knowledge, allocate more funds to innovation, and give your clients more worth. You can do this to grow your market share and generate more income. Number 6. Build an emergency fund. The equivalent of self-funded insurance is an emergency fund. It's money you lay up for unforeseen costs like auto repairs and unanticipated events like job loss or lockdowns brought on by pandemics. There are ways to make things worse when unanticipated costs and situations materialize, including taking on debt and selling your investment. You have to pay interest on your debt, and if you sell your investment, you forfeit both the amount you sold and whatever interest it might have accrued through market exposure if you hadn't. So, in order to prevent either of those two occurrences, we advise that you immediately learn how to establish an emergency fund. 3 to 6 months worth of costs should be saved up for emergencies. Additionally, make sure the money is in a savings account that is simple for you to reach in case of emergency. An emergency fund, like insurance, won't make you rich, but it will keep you from losing your investments or going into debt in times of need. Number 5. Practice extreme savings from your income. Numerous expenses in your budget might be decreased or eliminated once you decide to focus on increasing your wealth. You won't be acting alone in this. There are many groups in existence today that advocate extreme saving techniques. The financial independence, retire early, FIRE, movement is one of the most well-known. They urge followers to save an enormous portion of their monthly income by promoting extreme savings methods. They accomplish this in a variety of ways, such as by making and creating the items they need, such as tables, rather of always purchasing them, or by baking bread. In addition to the cash rewards, Fisker has a sense of achievement that he finds more satisfying than shopping. Number 4. Have enough insurance. Insurance is a crucial expense that you should include in your budget. You can avoid suffering significant losses in the event of unfavorable occurrences by insuring yourself and your primary assets, such as your homes, vehicles, etc. You should, at the very least, obtain health insurance to protect your finances in the terrible case of a pricey illness. If you don't already have one, find in contrast the finest health insurance options available in the UAE. Think about homeowner and auto insurance if you own a home and a vehicle. Also, think about purchasing term life insurance if you have children or other dependent family members. Building wealth is nice, but losing it to unanticipated situations or occurrences will be agonizing. Be prepared and protect what is most important to you by getting insurance. Don't, however, overinsure. There are numerous pointless insurance products on the market. If there isn't a compelling need to acquire additional, stick to the 4 mentioned above. Number 3. Create a budget. If you're interested in learning how to start with nothing and become wealthy, making and following a budget is essential. You now need to develop a budget, often set on a monthly basis, to take charge of how your money is spent using the consistent revenue source we just discussed. A budget is a financial strategy for a predetermined time period that includes projected income and expenses. Every household and person should develop at least a monthly budget that details projected income and anticipated expenses. Living without a sound budget is like trying to navigate without a compass. You can be sure you'll end up lost in the financial abyss. The 50 hours 30 minutes and 20 seconds rule is a well-liked budgeting method. This method allows you to create a budget where 50% of your income is allocated to necessities like rent, mortgage, food, and healthcare, 30% is allocated to non-essentials like shopping, vacation, and entertainment, and 20% is allocated to savings and investments. Number 2. Get a regular income source. Without a consistent source of income, it is challenging to create riches from nothing. Without saving money, you cannot invest, and without a steady salary, you cannot save. This means that multi-level marketing, Ponzi schemes, or gambling do not help people create lasting wealth. Learn to ignore those who advertise quick money plans that only require 3 hours of work per week to acquire wealth. The key to long-term wealth creation is value creation. It is genuinely impossible to achieve sustained wealth if you are not producing goods or services with intrinsic worth and generating revenue from them. So if you don't already have one, find an excellent job. Number 1. Educate yourself about money. Before we can effectively address any significant changes in our life, we always need to adjust our thinking. Spending time on your financial education is the first step to creating wealth from nothing. Learn key concepts including return on investment, passive income, net worth, income, expenses, and financial freedom, among others. Keep in mind that, like all forms of education, financial education requires ongoing practice. To always be learning. But it's crucial to stress care in this case. There is a lot of erroneous information available as a result of the democratization of financial information. Make sure you just adhere to credible sites that will give you accurate information and point you towards sources from dependable and prosperous businesspeople, investors, and financial counselors. That's a wrap for today's video. What are your thoughts on our list? Let us know in the comments section below. And make sure to like and subscribe to our YouTube channel for more future videos.